Bitcoin Explained: The Future of Money or a Risky Gamble. Imagine a world where you no longer need banks, where money can be sent directly anywhere in seconds without high fees or government control. This isn't science fiction, this is Bitcoin. But is Bitcoin truly the future of money, or is it just another financial bubble waiting to burst? In this video, we'll explore what Bitcoin is and how it works, why Bitcoin is called digital gold, the risks and rewards of investing in Bitcoin, technical aspects of blockchain, cryptography, and mining, how to store, buy, and sell Bitcoin safely, the future of Bitcoin, and what experts predict. By the end of this video, you'll fully understand Bitcoin, its potential, and whether you should invest. So stick around, hit that like button, and let's dive in. What is Bitcoin and how does it work? Bitcoin is a decentralized digital currency, meaning no bank or government controls it. It was created in 2009 by an unknown group or person under the pseudonym Satoshi Nakamoto. Unlike traditional money, Bitcoin exists only in digital form and is stored in a blockchain, which is a highly secure and transparent ledger. Understanding the Bitcoin network. The Bitcoin network operates as a peer-to-peer system. This means transactions happen directly between users without intermediaries. Every transaction is verified by nodes, which are computers in the network, and transactions are added to a blockchain, making them permanent and secure. Bitcoin is often called the future of money, but is it really? Let's find out. The technology behind Bitcoin. How blockchain works. At the core of Bitcoin is blockchain technology. Here's how it works. Transactions are grouped into blocks. Each block is connected to the previous block, forming a chain. Every block contains a list of transactions, a unique cryptographic hash, which is a digital fingerprint, and the hash of the previous block for security. The blockchain is immutable, so once a block is added, it cannot be changed. For cryptography and security, Bitcoin uses SHA-256 cryptography, which converts transactions data into an unbreakable hash. It ensures that only the owner of a Bitcoin can transfer it, and it prevents fraud and hacking, making Bitcoin one of the most secure digital assets. What is Bitcoin mining? Bitcoin mining is the process of validating transactions and adding them to the blockchain. Miners use powerful computers to solve complex mathematical problems. How mining works. Miners compete to solve a cryptographic puzzle. The first miner to solve it earns the right to add a new block. As a reward, they receive newly created Bitcoin plus transaction fees. This process repeats every 10 minutes. Bitcoin halving. Every 4 years, Bitcoin rewards are cut in half, which are called halving. This slows the supply of new Bitcoin, increasing scarcity. Next halving is expected in 2028, which could drive up Bitcoin's price. Fun fact, in Bitcoin's early days, you could mine with a normal computer. Now it requires massive mining farms using ASIC miners. How to store Bitcoin safely. Bitcoin storage is different from traditional banking. You don't have a bank account. Instead, you store your Bitcoin in a digital wallet. There are two types of Bitcoin wallets: hot wallets and cold wallets. Hot wallets, for example, are Trust Wallet, MetaMask, and Blockchain.com. These are stored on internet-connected devices and are easier to use but are vulnerable to hacking. There are cold wallets, which for example are Ledger Nano X and Trezor. These are stored offline, making them immune to hacking, and are best used for long-term Bitcoin holders. Pro tip: never share your private key. It's like your password. If someone gets it, they can steal all your Bitcoin. How to buy and sell Bitcoin. Bitcoin can be bought and sold on crypto exchanges. To buy Bitcoin, choose a trusted exchange, for example, Binance, Coinbase, Kraken, or a local exchange. Create an account and verify identity. KYC is required. Deposit funds via bank transfer, credit card, or PayPal. And then buy Bitcoin at the market price or a set limit order. To sell Bitcoin, go to your exchange account, sell for fiat currency, for example USD, Euro, or stable coins. Withdraw to your bank account or wallet. Avoid scams. Only use reputable exchanges and enable two-factor authentication. Bitcoin versus traditional money. Which is better? Bitcoin and traditional money, or fiat currency, operate in completely different ways, each with its own advantages and challenges. Government control. Traditional money is fully controlled by central banks and governments, which can print more money whenever they need to. Bitcoin, on the other hand, is decentralized, meaning no single entity can control or manipulate it. Inflation risk. Governments constantly print more money, reducing its purchasing power over time. Inflation. Bitcoin has a fixed supply of 20 million coins, making it scarce and potentially a strong hedge against inflation. Transaction speed. Sending money internationally through banks can take days and involve high fees. Bitcoin transactions happen within minutes and typically cost much less, especially for large transfers. Privacy and security. When you use traditional money, banks and governments track your transactions. Bitcoin offers partial anonymity, as transactions are recorded on a public blockchain, but personal details are not directly attached. However, government regulations are making crypto transactions more transparent over time. Counterfeiting and fraud. Physical cash and even digital bank transactions can be faked or manipulated. Bitcoin transactions are secured by blockchain technology and cryptography, making counterfeiting impossible. While Bitcoin has many advantages over traditional money, it still faces challenges like price volatility, regulation, and mass adoption. Some believe Bitcoin will replace traditional money, while others think it will remain an alternative asset like digital gold. What do you think? Can Bitcoin become the future of money, or will fiat currencies always dominate? Let us know in the comments. Is it too late to invest in Bitcoin? A common question is Bitcoin too expensive now? Here's the reality. In 2010, Bitcoin was only worth 1 cent. In 2017, it reached $20,000. In 2021, it reached $69,000. And in 2025, it surpassed $104,000. Bitcoin is still volatile, but long-term investors believe it will reach $100,000. However, investing in Bitcoin comes with risks. If you invest, only invest what you can afford to lose. Would you invest in Bitcoin? Let's discuss in the comments. Final thoughts. Should you buy Bitcoin? Bitcoin is a powerful financial revolution, but it's not for everyone. Before investing, do your own research and only invest money you can afford to lose. And understand that Bitcoin is volatile. If you found this video valuable, hit like and subscribe to learn more about finance, investing, and cryptocurrency.